A long-lasting impact on India's economy. That's the word coming in from Ajay Srinivasan, CEO Financial Services at Aditya Birla Group. Latha caught up with him just a while back. Take a look.
So I think it's early days, and therefore we are all kind of trying to figure out what the impact is. Like you said, it's never been done before at this scale. I mean, 85% of currency notes disappearing from the system is a large shock. My sense is the initial impact is going to be probably slightly more than many people expected, because I think it's taking time for the cash to come back into the system. But I don't know how long that's going to last, and I think ultimately this is going to be very, very good for the economy, and I think for the financial services sector in particular, because you move money from the informal sector into the formal sector, you get lower rates, you get better taxation, you get a better fiscal deficit. So it's very difficult to not think of all the positive benefits that will accrue. I just don't know how long this adjustment process will take.
Well, actually, financial services sector, the initial pain appears to be a little more. At least the stock markets are running down. Many of the NBFCs, which were the darlings until now. What are your people on the ground telling you?
So at least as of now, we've not seen any impact on our NBFC. In the housing side, we've seen a slowdown in logins. We've seen a slowdown in disbursements. But you know, a lot of this is just adjusting to things. So for instance, in life insurance, we've seen a slight drop in renewal premiums that we used to collect. But that's because we used to get some of the renewal premium in cash. And if people don't have cash in their system, they're going to delay the payment of renewal premiums. So some of this, in my sense, is an adjustment. I think the whole thing about there being a problem with credit and there being a problem that people are reacting to, and the stock market anticipates many, many things way ahead of time. I'm not sure it's actually playing out on the ground as of now. We just haven't seen the signs of that.
You don't see an NPA uptick, at least in this and the next quarter?
It could be, but I just think it's too early, and at least we've not seen anything so far that gives us a sense of that. But you know, a lot of that is going to be last mile, the last mile where people have trouble, and therefore looking at at making their adjustments to their business model. And we're not fully retail in the sense in our business model compared to many other players whose prices have adjusted. You know, our model is slightly different, and therefore, at least as far as our model is concerned, we haven't seen any impact so far.